Okay, think about it. Banks are just everywhere, right? On every street corner, in an app on your phone. We trust them with our paychecks, our savings, our loans. But have you ever really stopped to think about what happens behind the scenes? What happens to your money the second you deposit it? I promise you it's probably not what you think.
And in the middle of all that back and forth, all that tapping and swiping, have you ever just paused and asked that one simple question? How do these guys actually make money? The answer, well, it's way more interesting and honestly a bit more shocking than you might expect.
So let's get right into it. And I'm not talking about the simple textbook answer you learned in school. No, we're going to pull back the curtain and look at the real system, the one that's quietly humming away under everything. So the big question is, how do they really pull in those mind-boggling profits?
What we're about to do is uncover this hidden financial machine. It's a machine that, whether you know it or not, quietly touches every single part of your life. And I'm willing to bet that once you see how it's built, you'll never look at your bank account, a loan, or even a dollar bill the same way again.
All right, so where does this all begin? It kicks off the very moment you make a deposit. Most of us have this mental picture, right? That our money is sitting there, safe in some digital vault with our name stamped on it. Well, that's the very first illusion we need to shatter. Okay, brace yourself for this because it's a legal reality that catches almost everyone off guard. The moment you deposit money into your account, whether it's cash or a direct deposit, it is no longer legally your property. The bank becomes the legal owner of your money. Yep, you heard that right.
So wait a minute. If it's not your money, then what in the world is that balance you see on your banking app? Think of it like this. It's an IOU, a digital promise. It's the bank's liability, their debt to you. It's a promise they'll pay you back when you ask, but what they do with the actual cash in the meantime. Well, that's where the real magic and the real profit machine kicks into high gear. Okay, so the bank owns your deposit. Now what? What do they do with it? Well, this is where it gets really clever. They have this system, perfected over 100 years, for taking the money you just gave them and multiplying it. It's not magic, but it's pretty darn close. The system is called fractional reserve banking. Now I know, it sounds super complicated, but don't let the fancy name fool you. The core idea is actually really simple. The bank doesn't have to keep all your money just sitting there. They only have to hold on to a small piece of it, a fraction. And the rest? Well, the rest they can lend out. Let's actually walk through a quick example so you can see it in action. Let's say you deposit $1,000. The bank is required to keep a fraction, let's call it 10%, so they hold on to $100. What about the other $900? They loan it out. Now, the person who borrowed that money goes and spends it, maybe on a new laptop. The store that sold the laptop then deposits that $900 into their bank. And what does that second bank do? Same thing. It keeps 10%, $90, and loans out the other $810. And this cycle just keeps going and going and going. And here's the crazy result of all that. Your single initial deposit of $1,000 can actually expand through the banking system to become as much as $10,000 in total money. It's called the money multiplier effect, and it is one of the fundamental ways our entire money supply grows. Now here's the really important thing to grasp. Through that entire process, not a single new dollar bill was printed. It was all just numbers, digits being typed into computers and zipping between accounts. And that's why the vast majority of money in the world today isn't physical cash or coins. It's just digital entries on a bank's computer server. But hold on, because that whole multiplier thing, it's just the warm-up act. It leads us to the biggest, most fundamental secret of modern banking, the one that truly powers the entire global economy. It's a concept that sounds, well, frankly, it sounds impossible, but it is, without a doubt, exactly how the system works. So most of us think of banks as just middlemen, right? They take in money from people who are saving and then lend that same money out to people who need to borrow. That's the story we're all told. But it's not true. The reality is, banks don't lend out existing money at all. They create brand new money, literally out of thin air, every single time they issue a loan. Just let that sink in for a second. Money is created from nothing. It's not pulled from someone else's savings account. It's not taken out of a vault. It is simply typed into existence.
Think about it like this. When you get approved for a $20,000 car loan, the bank doesn't go and check a vault to see if they have the cash. They just type $20,000 into your account. Boom, that's it. In that instant, $20,000 of new money was created. And now you owe the bank that money back, plus interest, of course. Okay, so now we know the mind-blowing secret of how money is created. But how do banks turn this incredible power into cold, hard cash? We're talking billions in profits. Well, it basically comes down to three main profit engines.
So what are these three engines? First, and this is the big one, is the interest they charge you on the money they literally just created out of nothing. Second is the massive and often hidden world of fees. And third is what's called the investment spread. Basically, the profit they make by investing your deposits. Remember, the money they now legally own.
Let's zoom in on those fees for a second. We're talking about a quiet but absolutely relentless stream of income for them. Monthly maintenance fees, overdraft fees, ouch, ATM fees, late payment fees, the list just goes on forever. Any one of them might seem small, just a few bucks here and there. But when you multiply that by millions and millions of customers, it adds up to a staggering amount of money. And it's basically pure profit for the bank.
And then there's engine number 3, the investment spread. It works like this. The bank takes all those deposits, your money, and invests it, maybe in government bonds, maybe stocks, earning a decent return, let's just say 5%. Now, what interest are they paying you on your savings account? Maybe, if you're lucky, 0.05%? That massive gap between what they earn on your money and what they pay you for it, well, that's another giant pile of profit, right there.
Okay, so a thought might be popping into your head right about now. If banks are just creating all this money and lending it out, isn't that system, incredibly fragile? What would happen if a ton of people got scared and all wanted their money back at the exact same time?
Well, you're not wrong to wonder. That exact scenario has a name. It's called a bank run. And for a long time, it was the ultimate weakness of this system. It's what caused banks to totally collapse. But today, the system has a built-in protector, a very powerful one.
And that protector is the central bank. Think of it as the bank for banks. It acts as what's called the lender of last resort. So if a regular bank gets into serious trouble and is about to go under, the central bank can just step in and create billions of dollars to bail it out. It's a safety net that you and I, well, we just don't have.
So let's just quickly recap the whole thing. Here's how banks really make money. 1, they legally take ownership of your deposits. 2, they use that as a base to create brand new money out of thin air when they make loans. 3, they charge you interest on that money they just created. 4, they collect billions in fees. 5, they invest your money and keep almost all the profit. And finally, they're protected by a central bank safety net. When you lay it all out, it's a pretty brilliant and insanely profitable system.
Now, look, understanding all this doesn't mean banks are evil. It just means you're now a much more informed player in the financial game, because now you know the real rules. You see the hidden mechanics of the machine that quietly makes the world go round. So the real question is, now that you know, how does it change the way you see your own money?